please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC-TV18 headquarters in Mumbai.
We have to get back to mammon and monetary matters. And today, actually, it looks like it's going to be a day of great cheer. Important number to note is the US 10-year yield. It jumped by about 8 to 10 basis points. It touched a high of 2.95, even more in intraday trade. And then it receded to 2.87. So clearly there is going to be a huge tailwind for all risk assets with the yields falling so sharply, and that should benefit us. Already, I think on Friday, all of you were discussing in Closing Bell and other shows, Anuj, that India, the Nifty also is finding excellent support at 10,350. So we were anyway prepared for that tailwind. This is going to be excellent. I think today PSU Banks will come and support play as well. For the simple reason, of course, that they are seriously shorted, but also because this business standard report that the government is thinking of the holding company concept can be extremely positive if of course it bears fruition. So it looks like it could be a day for the bulls.
Oh yes, it could. In fact, that's the question we're asking, right? Is risk on back in global equities? Because the commentary that came in from the Fed was important. They've not hiked their inflation targets. Inflation is still sub 2%. So most people believe that the Fed officials themselves are not too aggressive in terms of rate hikes, and that's something that the street will take positively. The DII numbers were good. We saw about 1,500 crores of buying on Friday as well. Although FIs continue to be sellers. Anuj, morning. So what's the sense? I mean, is risk on back, or are we calling it too soon?
You know what, let's not get too overexcited. That's the only thing. Friday was the first day of new series. Friday was the day to buy. Today perhaps is not the day when, especially after a 100-point rally at the, at your back, and then you have a 50-point rally if you want to buy. It could still work out, but, the concept of risk reward is not telling you that you should buy the first gap up. Probably you should have on Friday. Of course, that's easier said with hindsight. But look, the Nifty now runs into some kind of congestion between 10,550 to 10,600. That's where it topped out in this sort of post-correction run as well. The current 20 DMA is also 10,638. And it also ties in with the recent high for the Nifty as well, 10,638. So that is the important point to watch out for. Banks could see some short covering, but the bigger moves may happen in IT stocks because there you have seen genuine delivery-based buying. What you've seen in banks is essentially short covering, and there may be some more. For me, the really startling data on Friday was FIs buying 4650 crores in index options. At the start of a series, you normally sell index options because you want to eat the premium. When you buy index options, and that too such a huge quantity, that means you're taking a large bet because which way? That's exactly the point. And 36,000 calls and 26,000 puts. So that's what makes the market. There's I think half the FI community which believes that there's a 400-point upside, and there's half which believes that there's 300, 400-point downside. You take your pick. So I think take each day as it comes. Right now we have a powerful counter trend rally which could go on for some time, but you run into a 20-day moving average resistance as well. For me, the big point this week would be to watch the market breadth. The market breadth would tell you if the market is ready to reverse. If the market breadth starts to move in favor of declines, that means the trade which you've seen of this counter trend move could be beginning to unwind. That's a monitorable. The advanced decline mid-cap index, that is something that I'll watch out for this week.
Okay, but the other thing that we're going to watch out for are some of the banks, Lata?
No, I mean, I think the business standard story is very important. I do not know the extent to which the government will follow it up, but I'm referring to the story that the government is considering amending the various banking acts, largely the Banking Regulation Act, and try and create that holding company. If they can move towards it, and they do get a Rajya Sabha tally of about 100 seats by the end of the year. So it is still possible. My point is this is a long winding process. But even if they indicate, if somebody from the government can come out and even say this, it can be extremely positive for not just public sector banks, but it is like GST. It is like, DBT. It's a long-standing reform for the health of the country. It will mean that an SBI can go and hire from the IIMs. It will mean that, for every small thing, they don't have to look behind at the investigative agencies. And it's a massive corporate governance change for public sector banks. This is a business standard report. It would be great if somebody from government came and said it. So I'm just putting it on the table as something that can be a long-term positive, provided it's followed up.
Okay, well, let's kickstart the week on that note. It is a truncated week for us. We're off on Friday for Holi. So 4 trading days. Let's take a look at what our wise experts have to say as we head into trade this morning. First up, we have a fundamental and a technical call from CLSA. Chris Wood of CLSA says, greed and fear's base case remains for now that financial markets are more vulnerable to an inflation scare than a real return of inflation. He adds, greed and fear says financial markets because clearly fixed income markets are more vulnerable to such an outcome than equity markets. Still, Chris says stocks are also vulnerable to higher interest rates, most particularly those stocks trading on high multiples, and this is why greed and fear maintains the bias in favor of cheaper Asian and emerging market equities. Chris says greed and fear will increase the weightings in MSCI China and Hong Kong in the Asia Pacific ex-Japan relative return portfolio by a further 1% each, and this will be paid for by reducing the overweight in India by 2%.
Okay, that's not looking too good. But let's hear what from the same brokerage another technical expert has to say, Lawrence Belanco. Lawrence says after a brief pause at initial support provided by the 50 DMA, which coincided with the November-December 2017 highs at the 10,530, 10,566 area, the Nifty has lurched lower again. He says this opens the door for a test of the next chart support at the 10,036, 10,052 range provided by the 200 DMA. Lawrence says this support zone should contain the current corrective decline in the Nifty. Of course, we are hoping it contains earlier.
Okay, well, let's do one thing. Let's also get you some money market views for the day and tell you how to approach that pocket. Pramit Brahmabhatta Veracity says the rupee will see marginal positive impact in today's session on the back of positive cues from the domestic equity market. He expects the dollar INR pair to trade in a range of 64.50 to 65. And Ajay Magnolia of Edelweiss says the US Treasury yields have eased after the spike to 2.95%, and this will provide some comfort to domestic bonds too. He says there are no major local triggers and bonds are expected to track any sharp moves in the US yields, crude prices or the rupee. He adds the 10-year benchmark bond yield is likely to trade in a range of 7.64 to 7.69% today.
Okay, keep in mind today is also the expiry of the rupee contracts on the NSE, so there might be the first move till 12 o'clock and then a second move as well. Over to Mangalam now for the world view.
Well, Wall Street rallied on Friday's trading session, so the Dow adding almost about 350 points. With the move on Friday, all the 3 major indices have ended the week in the green. Nasdaq was the key outperformer there with a gain of about 1.8%, led higher by Facebook, Amazon and Netflix. Thankfully, Kylie Jenner did not tweet about any of these companies. We got some earnings coming by from Hewlett-Packard that was up about 10.5%. So HP reported a good set of numbers. Some fear subsided because the CBOE Wix, that one fell down by about 12%. Why did that happen? Well, because we saw a softening in the yield, which softened from the 4-year high, ended closer to 2.857. At the same time, the European markets, we saw mild greens out there in the 2 frontline indices. The FTSE were underperformed because of RBS, which was down 5%. Retail sector did badly. Inditex, Zara owner, that one fell by about 7% because they're shutting their Irish web division. Among the Asian markets, though, we are seeing some green, but they're off the morning highs. The only one which is outperforming is the Nikkei, primarily also because of the stronger dollar. The SGX Nifty, on the other hand, indicates a start with the tune of 40 to 50 points in the green.
Okay, that was a snappy one. Thank you very much, Mangalam, for that. Well, we have lots of big voices that we spoke with over the weekend. The weekend in the first place was abuzz with a lot of pharma industry bigwigs. They had gathered at the 15th edition of the BioAsia Summit. Our own Ekta Batra was there as well. She was moderating a lot of sessions. She also caught up with Satish Reddy, chairman of Dr. Reddy's, and spoke to him about the pricing pressure and the other key themes in the pharma space. Listen into that chat.
So I think it's a part of things settling down somewhat. at this point of time, because if you see the kind of pressures that have led to this situation, it's been a variety of things. I mean, some of these things have happened the first time, because in the past you would actually see industry consolidating. For the first time over the last 2-3 years, you've seen the customers consolidate, and that's had its own effects. Because almost, if you see, about 90% is of the purchasing is done by 3 large purchasing groups. So you can kind of imagine the pricing pressure that puts on manufacturers, and that's what played out. That's number one. The second part is obviously the number of approvals. I believe last year was almost about 1,027 generic approvals which were given by the FDA. So it also has its effect on number of people competing in the market, and also pulling the price down, because that's the way to enter the market once they come in late. So if you see the net effect of all this, it's led to severe pricing pressures for most of the companies, and it's in most of the cases it's been almost double digits, including the large companies. That's what we have seen. So is that completely settled? I don't think so. So it's still going on even as we speak. But obviously it will bottom out at some point of time. To be quite sure of that.
Asian market screen is looking good this morning. The SGX Nifty indicating a gap up opening of almost about 0.5% or so. All eyes will be on the new Fed chairman Jerome Powell's testimony before the Congress tomorrow, and the market is now awaiting his comments for any clue on what the central bank's interest rate hike path will be. But our research team is standing by to give you the list of top 10 stocks to watch out for as we head into trade today. Hi guys, morning. Anuj, what are you looking at?
So, Sonia, my belief is that at least for today and for next couple of days, the trade should be to look at stocks where you have highest amount of shorts, which could have a powerful rally, but not necessarily beyond a 20 and 50-day moving average. For example, ICICI Bank, it's trading below its 20 and 50-day moving average. It has huge number of shorts. If you take a look at the put-call ratio for ICICI Bank, it tells you that there are a lot of shorts. But there was decent delivery buying on Friday. So these are the stocks where you could see some short covering bounce. The other stock which could be down is Asian Paints. It underperformed on Friday. It didn't fall at all in that big Friday correction because of defensive safe haven buying. And now crude has started to move up, and there's general risk on buying. So this may correct a bit. That's my sense.
Okay. Well, Sun Pharma, I think that's where we've got the maximum number of brokerage reports as well. Ekta, how will the stock react?
Well, Lata, the news was actually out on Friday, and the stock reacted and ended at the high point of the day. So the street is still awaiting the details with regards to the observations, and that's basically what the brokerages have summed up, that while the number of observations are low for the Halol facility, the details really lie in terms of what these observations are, whether there are any sort of repeat observations. But if you just look at the kind of reaction the stock had on Friday, I think the street is more optimistic about Halol than negative at this point in time, and hence maybe that optimism is likely to continue today, with the caveat that we're still waiting for details from these from the observations.
Okay, so that's Sun Pharma. Will be interesting after that 5% rally, but Dr. Reddy should react negatively.
Yes, absolutely, Anuj, and that's an important takeaway for the likes of even something like a Sun Pharmaceuticals, because you're talking about the Srikakulam API facility, which had a warning letter since 2015, got re-inspected in April 2017, and at that time only received 2 observations. But the US FDA is still in dialogue with Dr. Reddy's to clear this plant, and they've received an EIR establishment inspection report with an official action indicated status on it, which means that the warning letter is still prevalent on this plant, and there's a likelihood that they will need a re-inspection of this plant before it gets cleared. So is there a takeaway for something like a Halol, which only got 3 observations, and it might even be mild, but it could take longer? Dr. Reddy's would be in the red, but it would probably be a read-through for something like a Halol also, in terms of the uncertainty for at least some time.
Okay, thanks for that. Well, in any case, Dr. Reddy's has fallen almost about 11% in this year already. So that stock has been underperforming. But the banks is what you'll watch for today?
Yeah, I mean, for the reasons I already discussed, that this is an important report that Business Standard is carrying, and it may well be that the government will start that conversation that we want to move all the banks into a holding company. Now, the main benefit is the government's children are regulated by the CBC, the CBI, and the courts, but the government's grandchildren are treated like private companies. For instance, say even Axis Bank. Axis Bank is largely owned by LIC and government entities, or for that matter SBI Mutual Fund, or for that matter SBI Life. There you can pay lateral salaries, because you're not directly owned by the government. This holding company concept can give that kind of operational freedom to public sector banks. So even the conversation can be treated as positive. I mean, to be fair, many of the stocks have fallen a lot, so some of them might find a little bit of support on this issue as well. Just a word on HDFC Bank. The SEBI has, of course, warned that bank and told them to place a report with SEBI on how their results leaked over WhatsApp. So that might have a negative impact on that stock.
Okay, we'll keep an eye out on that. But moving on, some fundraising plans from Reliance Power. Anisha is here to tell us more. Anisha?
Well, yes, Reliance Power would be in focus as the board is going to meet on February 28th and consider raising funds via QIP. Now, the size, dilution and other modalities is what we'll know later. But do remember that the promoter holding right now is 75%, and my guess is that the fund proceeds will be going to be used to improve the financial health and balance sheet health of the company. On a lighter note, I would want to know how the interest in this particular QIP is, because a lot of people actually burned their hands in the IPO exactly a decade ago in 2008. Let's see how this pans out, but the stock will remain in focus today. Back to you.
Okay, thank you very much. Newspaper reports and now confirmed that Simbhaoli Sugars has got a CBI notice against it. Naveen?
So after the jewellery companies, Lata, what we understand is the CBI has registered a case of around 110 crore rupees bank default against Simbhaoli Sugars, and also booked the top level management in this. Remember, the loan was taken by OBC Bank. So taking you all back to 2011, when the company had raised almost 148 crores via a loan, and it seems as per allegations that was diverted to their company's own funds rather than giving it to the farmers. Apart from this, incidentally, the company later on raised another 110 crore to repay the earlier loan of around 92 crore, which turned out to be an NPA. But for the time being, as per news report, CBI has registered a case for 110 crore rupees against the company for bank default case. Back to you.
Okay, thanks a lot for that, Naveen. Let's move on then. Some more stocks and news, Sonal.
Well, I'll start with JSW Steel, where reports indicate that the company is set to acquire Italian steelmaker Aferpi for a sum of around 600 crore rupees. And the main rationale to acquire this company is to enter the European automobile industry. Now, remember, Aferpi is a company that is into specialty long products for railways and bars for auto industry. However, CNBC-TV18 has not independently verified this report. For Atlas Cycles, it's peddling to profits this time. Though the revenue was flat at around 145 crores, they reported an EBITDA versus EBITDA profit versus a loss last year, and also profits of around 24 lakhs versus a loss last year. So expect that stock to be in green. For Bhagaria Industries, CARE has upgraded ratings of various bank facilities, and save for AU Small Finance Bank, India Ratings has upgraded the rating to AA negative from A positive. So that is positive for the bank. DCM Shriram, in the last board meeting, the board of directors discussed the possibility of increasing the capacity of chlor-alkali production supported by downstream products. Remember, the current production capacity utilization of the company stands at 90%. So they'll be adding capacity utilization to that. For Welspun Enterprises, they are emerged as the lowest bidder for an NHAI project in Tamil Nadu for an order worth 1,536 crores. So expect that stock to be in green today.
Okay, thanks a lot for that. So that's a whole host of stocks that you can keep on your radar this morning. Let's do a quick recap now to tell you about those stocks. Expected to gain some of these banking names like ICICI Bank. Sun Pharma, it was the big mover on Friday as well. JSW Steel, Atlas Cycles, Bhagaria Industries, AU Small Finance Bank, Welspun Enterprises, SBI, Bank of Baroda and the nifty PSU Bank. While stocks expected to be under pressure this morning, Asian Paints, perhaps HDFC Bank, Dr. Reddy's and Simbhaoli Sugars.
The SGX Nifty is indicating that we'll have a good start. 10,550 is what the SGX Nifty is indicating. That's about 55-point kind of gap up, or 46-point kind of gap up if you're looking at the futures, because there was quite a bit of premium that you saw once again on Friday. Ashwani Gujral, Sudarshan Sukhani and Mitesh Thakkar now join us. Good morning, gentlemen. Ashwani, we had 100-point rally on Friday, and it looks like we'll have 50-point gap up this morning. Is there a trade then in that case?
Well, good morning. I think Friday was much more simpler than today is likely to be. So today you don't want to buy the gap up, but you want to wait in case the Nifty comes back. The Nifty futures around 10,490, 500. That would be the zone that you want to buy it in. Otherwise, it'll be choppy, and all of a sudden by afternoon, if there's no follow through, the market may not make a whole lot of headway. So today you have to be a bit more careful, buy on dips, but only buy on dips, don't buy the gap up.
Oh, okay. Good morning, Ashwini. How would you define the dip both for the Nifty and the Nifty Bank?
See, Nifty dip is 10,490, 500, and the Bank Nifty, I'm talking about futures levels, because that's what people trade. And the Bank Nifty futures, the price should be closer to say 25, 300, 320. If you get that, then there is an opportunity. If that does not happen, then there is no opportunity, and the market will most likely be choppy. As we've seen, Asia has come off the highs. It's a big risk that even we open higher and then come off the highs.
Okay. Good morning, Sudarshan. You would concur that the time for shorting and even selling is over?
Good morning, Lata. Yes, today's markets are likely to be cheerful, although not big gains are expected. But you know, Sridevi's untimely demise has certainly dampened spirits, at least for people.
Yes, I agree. We all agree.
Yes. But with whatever we have on the markets, the chances are that this gap up is not to be bought into. I feel that this is a relief rally in what is an ongoing correction, and this relief rally will face resistance somewhere around 10,600, 10,630, that zone. So we are not very far from here when we gap up. There is a buying opportunity intraday, and it's almost exactly what Ashwini has already suggested. If the cash Nifty falls towards 10,500, which is roughly where it closed on Friday, that's a dip, that's a buy. The second buy would be intraday if there is a trading range and that trading range starts breaking out. So there are two buying opportunities, but in any case I would suggest that Nifty Bank and Nifty positions should be closed before the end of the day. So do not carry them forward. Whatever you have today, you plan to sell them by the afternoon.
Okay, that's interesting. Let's get Mitesh Thakkar also on board. Mitesh, morning. Do you also believe that this is just a relief rally, or there's just a dead cat bounce coming and it's better to stay away from buying?
Good morning. So I do believe that this is a relief rally, but I believe it will be stronger than what we have seen before in the last couple of weeks. So I think the first targets mostly match on the upside. We would also talk about levels of 10,620, 630 as the first level to watch out for. But I do believe that there's good potential for the rally to extend to about levels of 10,700, 730. So in that sense, I would be comfortable buying, and we've been recommending buying since Friday. But even after a gap up, and you know, I would be comfortable buying or taking long positions on stocks or indices. I do believe that this will be a stronger one than what we have seen before. The health of the intraday indicators is much better this time.
Okay. Let's discuss individual stocks then. Ashwini, where are the long positions now?
I think metals should have a good day today. So Hindustan Zinc is a buy with a stop of 324, target of 338. Ashok Leyland hasn't really broken the 20-day moving average also in this correction. So that's a buy with a stop of 130, target of 144. Engineers India seems to be bottoming out. That's a buy with a stop of 165, target of 181. HDFC Bank, in spite of whatever SEBI says or does not say, that's a buy with a stop of 1860, target of 1920. If it gaps down, buy it. Okay. And DV's Lab is a buy with a stop of 1030, target of 1100.
Okay, fair enough. Sudarshan, what would be your individual stocks?
Well, I have a lot of mid-cap buying ideas, but I also have short sells. I think this market towards afternoon is likely to give us opportunities to sell also. The buying is easy. Ashok Leyland and outperformance is remarkable. So there is a buy idea there. Bata India, where a bullish head and shoulder is now almost being completed. It's a day trade, a swing trade. It's also a positional buy. You might want to simply buy and hold it for a few weeks. And JSW Steel from the steel metals pack, which is almost verge on the making lifetime new highs. It's ready for a breakout. So there are three buying opportunities which should do well even if the markets are choppy. PC Jewelers is a short sell. I think there's much more downside here. And so is Kajaria Ceramics, which keeps on making new lows day after day. So there would be opportunities towards the afternoon for both kind of trades.
Okay. Yeah, actually, you know, in the context of PC Jewelers, Sudarshan, our commodities editor Manisha was telling us that from the jewelry trade she picks up that credit has dried up for several parties.
Okay, well, both Ashwini and Sudarshan have picked a buy on Ashok Leyland. That's been a stock that has done very well. But Mitesh, what about you? What would you like to buy or sell this morning? Nitish, we can't hear you.
Yeah, we have 4 buys. I have 4 buys to 1 sell. Axis Bank has come down to important support level to 530, so keep a stop below that at 529. Look for rallies to about 551. Britannia was a buy on Friday. I think still remains a buy. I do believe there's significant upside which can happen in terms of a trading gain. So now it's a buy with a stop below 4,900 for targets of 5,200. Chola Finance made a fresh high. That's a buy with a stop at 1389. Look for targets close to about 1480. Ashwini also covered Hinzik. I also have it on my list. A good swing breakout taking place over there. So buy with a stop at 322. Look for a first target of 342. And Asian Paints is the solitary sell call. It's a conditional sell. So since we are opening up today, if it starts getting below Friday's low, and this stock didn't participate in the Friday's 100-point up move, it actually closed negative. So if it trades below Friday's low, sell with a stop at 1116 for targets of 1060.
Okay. Just one more question before we move on. Ashwini, what about large cap IT?
Large cap IT will continue to move on. Whenever the markets will rally, large cap IT is likely to remain strong. So that way, all stocks which are now beginning to make fresh highs, like Mindtree did the other day, Tech Mahindra, TCS, I think large cap IT will outperform even the banks and the Nifty overall.
Okay, and I guess next in order will be the metals. Speaking of which, we had a very important voice on the channel just about half an hour back. Sanjeev Gupta, the executive chairman of Liberty House, spoke to CNBC-TV18. And as you know, he's a big buyer of stressed assets and not so stressed assets as well. In the context of the several steel assets in the NCLT case, here's what Sanjeev Gupta told Nigel D'Souza on the key assets that he is looking for from the stressed category.
We had to choose. We cannot bid for everything. So we had to choose. We want to enter specific sectors. We want to enter the primary steel sector, so we chose Bhushan Power. We want to enter recycling of steel, so we are going to bid for ABG to break ships there and recycle them. We wanted to be in the auto sector, so we bid for Amtech. In principle, strategically, it is a great fit for us. We have already bought the Amtech auto businesses in the UK from the UK RP equivalent, and those businesses are already integrated with our business and are already very successfully turned around. Similarly, in India, we're very confident that if we win auto, Amtech Auto, we will be able to integrate that with our business, which is the largest in the UK now in the sector, and we'll be able to make it a great success. So that is the reason and the basis on which we are bidding for these assets. We believe we will be a good strategic fit, and hence we will be able to make propositions which are superior to others.